Hi folks, welcome to your CB 101 review session. Again, our exam will cover adjusting entries, merchandising transactions, and the preparation of a multi-step income statement, and a whole host of questions regarding ratios. So let's begin. This first question is dealing with adjusting entries. So we have a company, Tim's Towing, and they have the following items from their unadjusted trial balance, so that's before adjusting entries at the end of 2019, and that's December 31st. So you can see they have a liability. Remember, anything that says unearned revenues of any kind, it's a liability because it represents money that Tim's Towing took in, but they haven't yet provided towing services for. And that liability is $17,200. They've also got some prepaid insurance. Again, it's important to have insurance on those vehicles, right? $8,100. They've got trucks. Again, you'd need those for towing, and the cost of the truck was $56,500, and the supplies balance is $3,900. So again, you've got a liability here with unearns, and then you've got all these three accounts which are assets, right? And what you need to do is to make adjusting entries, and the hint here is that you may need to create some new accounts. So let's begin. We are asked or given information that says the balance in the prepaid insurance account, which we had at $8,100 here at the end of December 2019, that amount was actually paid on February 1st, 2019, and that bought them a 3-year insurance policy. Coverage was commencing February the 1st. What you need to do is figure out how much of that prepaid asset, prepaid insurance, did we use up from the date we bought it to the year end. Now notice we bought it in the current year. So we want to count the number of months from February to December where we used up some of this insurance. Well, we used up 11 months of it, right? But don't forget, $8,100 is for 3 years or 36 months. So what we're going to do is we're going to take the amount that's prepaid for 3 years and find out how much is that for 11 months of 36 months or 3 years. And when we do that math, we've used up $2,475 worth. So we need to debit insurance expense for $2,475, and we need to credit prepaid insurance to show how much we've used up of the asset, $2,475. We also know that we used up office supplies of $2,400. Well, we had $3,900 to begin with, right? We used up $2,400, so that means we have to credit our supplies, which is an asset, by $2,400 because we need to show how much we used up or expensed. Remember, when you use up an asset, you have to show an expense. So we're going to debit supplies expense and credit supplies for the amount that we used up, which is $2,400. Now, on December the 30th, Tim's Towing got a utilities bill of $1,750. Now, that might have been for utilities that they use, things like heating the business, any kind of utility expense, hydro, any of that kind of stuff, maybe the phone bill, anything, right? But it's a utility. And they were charged for the month of December $1,750, but they're not paying it until next year. We need to make an adjusting entry to show that the utility expense we're going to set up is for this year, 2019. So we don't set up the expense when we pay it next year in January. We set up the expense when we incurred the cost. And that utility expense is $1,750. And because we're not paying until the next year, we're going to set up an account payable for $1,750. Now, during December of 2019, the company performed towing services for a local garage, and they billed them, or they needed to bill them $13,700, right? They're not going to collect until January because, again, they're billing them at the end of the month, but they did this service, and they don't expect that they're going to be collecting until January. They haven't yet recorded, and here we are at the year end, and we're saying, man, we got to get this bill out, right? Because otherwise we won't get paid in January. So we set up an account receivable and we credit the towing revenue for the amount that we are owed by our customer, that local garage. All right. So when we set up the bill, then the invoice goes out, right? So then we can expect our money next month in January. So we need to make an adjusting entry which debits the account receivable because we're sending the bill at this time, and credit the towing revenue because we already provided the service. Now, in Part E, we have to record depreciation on the truck. The truck was purchased on January the 1st, 2019. That was our truck for $56,500, right? So this truck we just bought earlier in the year. And we estimate that our depreciation is going to be $87.50. We have to record it at the end of the year to make sure our income statement reflects the cost of using that asset, the truck, up. The other reason we have to reflect depreciation expense is because that truck that we bought, we used it in order to provide services to our customers, and that helped us to generate revenue. So we have to allocate the cost of that truck over the period 2019, because that's the period that benefited from the use of the truck because we earned revenue using it. So we're going to record our depreciation expense, which we're giving you here. You didn't have to calculate it, for $87.50, and we're going to credit accumulated depreciation on the truck. And you'll remember that the accumulated depreciation is what kind of an account? It's a contra liability account. So its normal balance is credit, and it's a contra account to the truck account. We'll do more work on that later on in this question. In transaction F, remember we had that unearned towing revenue, so customers paid us in advance to provide towing services. Guess what? We provided services to those customers during the year, right? We collected that unearned revenue of $17,200 on August the 1st, and it was going to cover 8 months of towing service. We have to figure how much of that unearned revenue, which is a liability, we satisfied by providing services to our customers. Well, we provided services throughout the month of August because we collected the money in August, so we would have provided service for August, September, October, November, and December. That's 5 months. But this $17,200 is for 8 months. So we want to allocate 5 months to the current year of the entire 8 months that the $17,200 covers. So we have, in essence, provided services to our customers by providing towing. So we've reduced our liability by $10,750 over the 5-month period from August to December of this year, and that means we've earned towing revenue of $10,750. Now, we also have employees that worked during the month of December that we aren't going to pay until January of next year. So that means that their pay period falls on January the 15th. That's when we pay them. So if they've worked in December, which is part of the 2019 year, but we're not paying them until January 2020, that means because they've worked in 2019, that's a cost of doing business to us. We have to book the wage expense in 2019 and credit wages payable. Now, these wages payable will be paid in January 2020. But we have to set it up as an obligation or an account payable now, or wages payable now, so we include it on the balance sheet in the current liability section, so we know how much is owing to our employees for work that they did this year in 2019. So that's what the adjusting entries look like. Now what I'm asking you to do is think, now that some of these adjusting entries have been made, what would the balances be of these 3 accounts: prepaid insurance, unearned towing revenue, and the supplies account at December 31st, 2019, after the adjustments have been made and posted? So we know we started off with prepaid insurance of $8,100. That was at the beginning of the question, right? Right here. But we know we used up or credited it for $2,475. So that means we're going to have $56.25 left on December 31st, 2019. We had unearned towing revenue of $17,200 in the unadjusted trial balance, but remember, we used up of that unearned, we used up $10,750. So don't forget, this is a normal credit balance account. The unearned, we just used up or debited $10,750, so we have $64.50 left. And supplies started off at $3,900, but you'll remember earlier on in the question, we said that we used up $2,400. So we credited our supplies account for $2,400, so that means we've got $1,500 left. And now I also asked you to calculate after the depreciation entry would have been recorded. So after that adjusting entry is made, what's the net book value of the truck? Well, you remember when we did adjusting entries, we said that the value of the truck at its net book value would be the value of the truck at cost, which we had in the opening part of the question, which is $56,500, and we need to deduct any of the accumulated depreciation on it. Well, we just bought the truck this year in January 2019, and we've only so far booked $87.50 in accumulated depreciation, so we're only going to have $87.50 in accumulated depreciation, which is going to leave us with a net book value of cost less accumulated depreciation to give us the net book value of $47,750. Okay? So that concludes our video for question 1. The next video will focus on question 2, which is doing a multi-step income statement.